Well, good morning and welcome to the pre-market rundown for TriggerCharts on Friday, November 18th, 2022. How's everybody doing? I hope you're doing well. There's a lot of action in the markets right now, giving us great trading opportunities, giving us the opportunity to find both short and long opportunities that are out there from a trading perspective. You know, obviously, for those of you that have more of a, I will call it buy and hold strategy, there still has been some really good opportunities when you look at where the markets have been, where the individual equities, futures, currencies have been, because those wide ranges have led to some valuation missteps, I think, by the people that are looking to buy. Now, with that, you have to obviously be prepared. And one of the things that you do on a regular basis is what? We create watch lists. Each and every week that I come here and I talk to you, I have a number of names on the watch list that I want to look at. Those names are those that we put aside and say, okay, if and then. And what I mean by if and then is if it does this, then I will do that. If it breaks above this level, I will buy. If it breaks below that level, I'll sell or short, whatever it may be. And that is basically the entirety in a nutshell right there of what trigger charts indicators do. Because what we did is we put together a very, I would call it a very simple way of looking at things. 3 lines is the core of all this, right? Blended with some of the other indicators, of course, but 3 lines tell you where the levels of interest are at any time frame, whether it's going to be from the aspect of the volume-based studies that we utilize to break above, break below, and we have some very basic and very simple rules. What is, when you get above a line, when you get above a level of resistance, what do? Well, we know what not to do. Do not be short. When we get below a level of support, what do? Well, we know what not to do. We don't get long or don't stay long, whatever it may be. And whatever you decide to do in between is up to you if you want to trade those ranges inside. Personally, I like to look for the breakout opportunities, the big bounces possibly, and the breakdowns. Those are the ones that I really like to look at. So where are we right now? Well, we have to talk about this, don't we? Right here, investing involves substantial risk. And everything that we talk about today is for educational purposes only. There is no guarantee of future results. Past performance is just past performance. That's all. Because you can lose money when you invest. We know that. The other thing that I'm going to mention to you is that we are continuing on working with the development, the execution, the information that is available to you through the relationship with our good friends over at Candid Commodities and TAS. And I'm going to mention this because I have to. It's what it is. Oh, what happened? I don't know what just happened. Oh, that happened. There we go. Okay, so what you have is some things that are happening. By the way, you can all receive, if you're on the mailing list, you're all going to receive an email, I think probably next week, about a session that's coming up. That will be a educational session that will teach you a lot about the things that are going on. But basically what you get here is whether it's on TradeStation or NinjaTrader or TradingView or eSignal, whatever you're using, whatever platform you're using, these are the same across the board. And you get these indicators that we're going to talk about and that we talk about each and every week. Many of you are longtime participants in the webinar. Bottom line is that if you want to trade and you want to follow along and you want to do and implement some of the things that we talk about, with the caveat about, of course, that trading is a risky proposition, then you have to get the indicators, right? You have to do that. So go over to anywhere on TriggerCharts.com. Anything that you click on there will take you right over to getting more information about how to install and how to utilize the indicators that we have in the new market profile bundle. I really encourage you to do so because it's kind of the way you trade. It's what happens. It's what we do. All right. So we're going to talk about a variety of stocks. The other thing I want to mention before we go any further here, I'm going to put the word like I do I put the word here in the chat. I like this to be a multiple level conversation, not just me talking at you. If you're sitting there watching TV, drinking coffee, talking to your wife, walking your dog and all that all at the same time, stop for 30 minutes and let's just focus in, because what we're trying to do is make you some money here on the opportunity of the educational component of what we're providing and what we're showing here, right? We're going to talk about things in TradeStation we have right here, and I have, let's kind of bring this over. We got, TradingView over here. We'll talk about both sides because it's just the easiest way to show you different different indicators on different platforms. Now, a lot of times I get, one more thing. So add, I'm going to put it again here, add some symbols that you want me to look at. If it's the same symbol that you ask me about every week, don't do that. Find something new. But I'd like to hear from each one of you, everybody that's out there. And there's plenty of you, but it seems that maybe it's too early and people are kind of shy in the morning. All right, what's going on here? Dazed and confused is definitely the theme right now. We don't know what's happening, right, from a day-to-day, moment-by-moment basis. What Fed official is going to come out and say what? Are we going to have rockets that go all across from North Korea and hit somewhere? Are we going to have rockets? Are we going to have more nuclear? Are we going to have what's going on each and every day? Now, we get past the election almost, right? The never-ending election right now. We get past the election. We know that there's a change and there's going to be some gridlock. That's a good thing. However, we see retail sales that are really good. Fed is trying to stop a lot of that and slow it down. But yet, at the same time, where are we? Well, we have 5% days in the market, a 7% day in the NASDAQ last week, and then we have a drop down this week, only to finish the week because today is options expiration, by the way. And my bet is they're trying to bring the S&P 500 index, the INX, up to $4,000 to tag some option expiration. That will be something that I would expect to see. However, that's going to be a little bit hard today. It needs about 60 points. We got 37 on the SPOOs in the morning on the pre-market right here. We got the futures on the Dow up 240 points and on the NASDAQ up about 1%. We're also seeing some movement in the small cap this morning. A little bit of hesitancy as we've been seeing. Bitcoin is starting to pop up a little bit, gold flat. Dollar has been stronger this week compared where it was. One of the things that we see that is going on with regard to the markets right now is there is a very high correlation with regard to not only rates, but with the dollar, which is good. I like that. I'll tell you why I like that. That's normal. That's what we should be seeing. The things that we saw the last number of weeks has been this lack of correlation entirely, and that has just not given any directional bias in terms of the bigger picture from market standpoint. Now, when you get down to individual stocks, we know about 80% of a stock's movement is probably correlated to and attributable to a market movement, especially when a market that we have so many passive investing going on in mutual funds, ETFs, the indices and all that, index trading, which was different over the last 20 years than we saw, before. But that is what it is right now. Right now, I got to tell you something. Markets have no idea what's going on. But what that leads us to is following the leader or trend following. And that where we look at something, and I'm going to show you something right here. I want to look at this right here. Let's just go here. Let's look at this index. No. What's happening? There we go. Okay. This is the S&P 500. Let's just look at this right-hand chart. This is the daily chart of the S&P 500. This is the actual underlying index. $INX is the index. And where is the trend? Well, you can look at a lot of different things. We know that the long-term trend, if we kind of look down here, you just draw a quick line here, right? We know the long-term trend is down. And right now, if we were to draw, let's see if I can draw a straight line. Nope, that's not it. Here we go. We draw a straight line. I would say approximately there is where our trend is, and you break trend over pretty much the level of 4,075, we'll call it. Now, that would be pretty impressive to do considering earnings estimates have come down dramatically. We have a Fed that is just pedal to the metal, and we have, 5,000 things going on around the world. But the trend in the interim basis is where? Well, that's a different story entirely, right? That trend in an interim basis is clearly very highly slanted to the upside. Obviously, we saw this move yesterday, and let's see if I can show this, which I can't because I'm stuck in that gear. Okay, here. Oh, here we go. Now, these lines don't mean anything right now, so let's just clear these. So we saw that the INX came right down to its support level, the magic support level again, and we got a new box drawn right here, right? So the last couple of days, we saw a new box drawn, the 3 lines. If you expand that, you can see it a little bit better. We got a new boxes drawn. This is the level. It came right up into this level of 39.43 yesterday. We'll probably trade, where are we now? About 30 points over. So we're going to be at 39.70, give or take right here. A little bit of a zone opening right in here. And again, wouldn't be surprised if we start to get towards that 4,000 today, only for the sake of getting it there. That's truly what it's all about. So now what we have is a trend, right? The trend right now is moving up. It's moving up. It's moving this way. The thing is, where does it break? Well, we can connect a variety of different lows. Oops. And say somewhere around there is the trend, and then go to the highs and say about there. There's your channel, right? That's approximately your channel where we have the highs that are connecting the lows. But again, what am I really looking at is this level right here. This level is a support line on a daily basis. Now on a 30-minute basis, we got right into this line right to the top there, and it failed, right? Again, today you're going to be trading about 30 points higher than where we were. 39.46 is where it was, so about 39.70, right about there. And then you have the interim resistance, which is old support, which becomes resistance right there. A lot of gappiness in here. This kind of range that we're seeing, and that's a kind of cool movement right there. This range that we're seeing right there, and then this move that we saw, this up move, and then again, trying to come down. A lot of lines on the chart. Bottom line is, again, I'm just going to go back to what I was saying a second ago, which is that there is really, a leader following or trend following going on right now, but not a lot of absolute direction inside of clearly what we're calling a bear market bounce right now. And that may change over time. That's not a good thing or a bad thing. It's just a fact of what it is. One of the big things we have to really focus on is this whole contagion issue. I mean, this is an absolute travesty. The idea that a company that was quote unquote well respected, and a guy who didn't brush his hair and walked around in flip-flops and crappy shorts and out of shape and sleeping around and kind of having a orgy for a board meeting on a regular basis, seemingly all the different board members and management living together, whatever twisted stuff that was going on there. And it may not have been, it may have just been a simple arrangement, but just sloppy. And how people got sucked into this. I'm talking about the big boys, how they get sucked. Anybody could be, trading on any exchange. That's easy enough. It looks like it's just, hey, I'm just, putting my various money at exchange and I'm going to trade it, Fidelity or Schwab or whatever you want, right? TradeStation for that matter. But these were crypto exchanges, much different. The crypto exchanges. And all of a sudden we have a situation where they do some things that are fraudulent. The question is, how far does this spread? Because now we're starting to get a lot of questions from various players about who are the owners in the FTX itself, who were the lenders to FTX. I mean, a lot of things going on that are just not good. Interestingly, Bitcoin has held up somewhat well, but it's not the coin itself. It's not Ethereum. It's not Bitcoin. It's not that. It's the players. It's the bad actors. It's the stupidity. And I guess we could put it like this, and a lot of people have been credited with this line, but during the high tide, water's clear, you can't see the bottom, things look great, everything looks wonderful. The low tide, though, you see all the different things that end up on the bottom of the ocean, the used rubbers, the cracked beer cans and bottles, and parts of plastic and things, and that's what happens. Where we are is the low tide, and we're starting to find out a lot of the excess, and we're starting to see the crap really just roll up on shore right now. Retail sales came better than expected yesterday. Interesting, 1.6%. You strip out some things, not as good, but nonetheless, overall, better than expected. Inflation over the last couple of weeks came down, but some of that was rental prices. Okay, that's interesting. Car prices in particular, car prices, used car prices came down, but did they have any choice but to come down? But other than that, you look at service and you look at a variety of other factors like food, not the greatest drop, 7.7% year over year. People got really excited about, thinking that the Fed is going to back off. Fed was quick to send out all their minions and say, hey, you know what? We're not backing off. But the divergence is really kind of interesting. What we're seeing is that companies like, and you compare and contrast a Walmart versus a Target. And Walmart, had a pretty good quarter. One of the things that Walmart is doing right is that they have about 20% of their revenue comes from food and groceries. And Target doesn't have that much. One of the things we also heard from Walmart is people are, buying lower. They're going for hot dogs and beans versus steaks and potatoes. So what's happening is it's drawing people into the store for low-cost alternative, and then buying other goods as well, whereas Target really doesn't have that. Target still has a huge amount of inventory backlog, doing sales, cutting prices, etc. We're seeing price cuts all over the place. This morning we saw some things out of companies like Foot Locker, up dramatically in the pre-market. Ross Stores finally getting a turnaround. Macy's did well yesterday. Kohl's did not. So there's a bit of a differential. We're seeing some of the high end doing really well, the low end struggling, but if they did execute well, they really have the benefit. So that's something that's important to recognize. Consumers are getting concerned. They are paying a lot more for things. So that's a big issue. In October, if you remember, we talked about something about a month, about 3-4 weeks ago. I said, keep your eye on the stocks in KWeb and in China, right? Oop, I don't want that. I want this. All right. Fat fingers today. Let's look at FXI first. This is the Hong Kong exchange. A little choppy and bouncy and tough to really read here, but down about 2% overnight in the pre-market right now. But you know what? We came from this low, like a 40-year low. Man, we talked about this. It was like a multi-decade low, or 20 years, something ridiculous. Let's see if we can do this monthly if it goes back this far. I don't think it will. Yeah, back to like here, right? The low was here, so it was about, closing low was back to 2006. That's not 40 years, but nonetheless, it's plenty of time. And then this big reversal that we see here. So let's go back to the daily. Look at this big move off the bottom from 21 to 26. Huge move. Same thing for KWeb, which is the Chinese internet stocks. This is a little bit newer ETF, but dropped down just hysterically down to 17 and change. Closed at about 18 and a quarter or so. 29 right now, down about 1.5% right now in the pre-market. But pretty impressive overall returns on this. And this is really from where it was back in, about 3 weeks ago, saying that this thing looks a little bit done. It's something to watch. Hopefully you picked up on that. Fed confusion, we talked about that a little bit. We saw, about 0.5% is the expectation for Fed funds rate coming out. December 14th, I believe, is the meeting. So about a month from now, everybody's like, okay, they can deal with that right now. Still, they're talking out of both sides of the mouth. We had somebody come out today saying, well, we really hope that we could see lower rates, or we don't have to really raise as much. And then we have, Bullard yesterday or the day before talking about, hey, 7% could be in the cards. So, housing prices are dropping. Okay. We talked about this whole thing, right? We talked about TriggerCharts and all that, education support platform. Everybody knows where to go. Go to TriggerCharts.com. You get that link for that special bundle. You get all the things that you need to get to make things happen. Past week, we saw PPI, which was weaker, the producer price index, and that was important for markets, and that actually was very helpful last week where we saw that big jump where CPI and PPI came in concurrently, and it was really a good thing overall to see that there was a little bit of a reduction in the growth of inflation, and gave everybody just this whole giddiness and said, wow, we're going to have seasonality, which we talked about, right? The seasonality into the end of the year. We have gridlock, and we have a Fed that may be a little bit kinder. I got to tell you, that right there, all we need to have is Russia pull back and China say, we are not going to invade Taiwan. And boy, couldn't have been better. We're talking about on the heels of a 14% return for the Dow Jones Industrial Average, and some stocks up 40, 50% across the board from the lows that we saw in September, October. So pretty good. Retail sales, like I mentioned, were a little bit stronger. NAHB, this is pretty interesting. This is the housing market. This is the builders' confidence. Think of it as consumer confidence, but for builders, their outlook, looking at things like, hey, what is the foot traffic that we're seeing in the new homes? How many people are putting, money down to secure a new home build, right? And the outlook that they have is piss poor. I mean, absolutely horrible. 33 is the number. Now, to put that into perspective, that's bad. I mean, they were 38 last month, but far off, the levels of 75, 80, really bad NAHB confidence looking out, and you can't knock it. You got to expect that the Fed is raising rates so dramatically. We saw that the mortgage rate last week dropped from 7% down to 6.71. Woo! Pretty exciting. But, trying to buy a house 1 year ago at 3% and now having to pay 6%, it's a doubling of your overall monthly cost on an interest rate basis. Really ugly. Housing market, though, when we saw some of the numbers come out this week, kind of stable. Now, next week, only Wednesday, it's the only thing I saw, was initial claims, new home sales, durable goods, short week. Markets are closed Thursday. They close at 1 p.m. Friday. Nobody gives a crap on Friday. Things are going to move around. It really doesn't matter. So you have Monday, Tuesday, Wednesday, open full days. Thursday closed, 1 p.m. Friday. Thanksgiving is coming. Hopefully you're doing something fun with the family. You get your mind clear. And one of the things you can do over Thanksgiving is spend a little time just chilling out. And what I mean by that is, you know, a football player does not play football 12 months out of the year, 365 days a year. They take a break. They need to refresh. They need to go through a process of rejuvenation and relaxation, let the muscles chill out. And they got to beef up the football players too. But same thing with you. You need to spend a little time getting just a little bit of a slowdown and chilling out a little bit. I have a lot of stocks to look at. I'm going to hit some of the ones that you mentioned here today. All right, so somebody's asking about TLT. TLT is the long bond. Interestingly enough, this was an interesting opportunity here. We saw a double bottom here. We saw that support held at about 92. This will work inverted to yields. So when yields are going down, this will go up. When yields are going up, this will go down. And obviously we know that yields have been going up and what has been happening. What's really fascinating here is I want to share this with you. This is unbelievable. Look at this. Let's go even further. Let me show you a little trick in this here. Well, let's go here, right here, and let's go down to the bottom here, right? In TradeStation, if I double, oops, wait, come back here. What's going on? I don't know what I'm doing here and why this is not working the way I want it to, but okay. Oh, forget it. I was going to show you the percent change. We could do it by just looking at 160 down to 90, 92 or something like that. $60. We're talking about a 40% reduction in overall price since 2021 when bond yields were, tipping on the zero line. Pretty amazing when you think about it. And where are yields going? Well, we had what's called a skew event. We had a fast move on yields, and that really took prices down dramatically. The fact is, are we going to see a 1 to a 3%? Let's just use that number, which is a 1 to 4%. It's a 4-time multiple, let's say, of yield. Where we have now, if we do the same thing, that would be 16. Are we going to see 16% and see this keep going down? I do not think so. So when we look at what's going on right now, really interesting opportunity to start speculating that bond yields will, if not start coming down, won't see the same kind of move up. I would expect, though, that right now that this range that we're seeing right here, you could see another test down to 96 very easily. That would be the line in the sand that I would write into the what if, if it goes past 96, I'm out, but I just can't imagine. Right now, you're stuck pretty much at this level of 101. Is the top end right now. But if you get past there, again, what if it gets past there, I think 105 is not, 103, 104 is really not that hard to get to. And you get some yield on this as well. So that's good. Somebody's mentioning Edit. There was some news on Edit yesterday. Interestingly enough, Edit yesterday let's kind of look here for a second here. And we're just looking at the lines. The autopilot's not on. I can throw the autopilot on. There was a short call yesterday. Very messy. Very, 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 let me say that again. Very messy chart, not one that's tradable per se. This is more of, hey, do you believe in the CRISPR technology? They came out with yesterday a analysis of one of the recent studies. I think it had to do with blindness. I think it was blindness. And it was mixed results. The stock was down, sub 10, about 960. Closed up at about, yesterday, closed right at 11, right, which is interesting, right? Let's see, close right 11. Yeah, big move. Where does this go? I mean, you've seen this consolidation break right now. I like the stock personally. I think that, let me rephrase that. Do I like the stock? You hit a triple bottom, a quadruple bottom here. This thing is going to be messy because it is what it is. It is a CRISPR stock. It's a biotech. It's going to be either hit it or miss it. I still think there's a lot of opportunity long-term in the CRISPR technology. And there's about 4 or 5 different stocks that are in that genre. There's Beam, there's CRISPR, Invitae, Edit, there's a few others. So hopefully you wrote those down, or you can listen to the replay and figure those out. What else we got? We got BABA. Remember, put your stocks and your symbols in here. I'm going to go to the ones I have. Baba did a nice breakout, obviously from the bottom. This just tracks what we talked about with the K-Web that happened the other day, that China seemingly talked about that they're going to be a little bit more kinder and they're going to be a little bit better off with regard to their reopenings. And once they do that, unfortunately, we saw the cases rise again. So who the hell knows what's going on there? Yin, which is the this yin and yang. This is the China bull 3 time, obviously went from 20 to 40, doubled up in a matter of, I don't know, whatever, 3 weeks. Pretty substantial. This goes along with some of the China levels. This is the FXY triple, technically. You see the opposite of this, yang. There's the opposite of that. So yin, go back to that. Actually, yang looked like it played out a little bit better here because the trend was so dramatic. You know, you have to look at FXI as the underside of this to decide whether you're going to invest in it. And again, we talked about FXI looking like it has a little bit of resistance here. But if China is coming in and they're going to do a major job at refreshing their economy and the 5 pillars that Xi Jinping talked about last week, and possibly trying to reinvigorate and doing some crazy things in the financial and real estate area, interesting place to look. ESJY. Is that? No. I think you look you're looking at ESY. There you go. What is this? EasyJet. Not a lot of volume here. You can see that when you look at a chart, this all just spotty, right? You know, I don't think, let's see if it, nope. I got to type right. Told you my fingers are not working so well today. There we go. You know, you can see this is the spotty nature of this. Let's kind of take this. This is now trading view. Interesting look here. You know, you're in a, this does have the Vega on here, the old autopilot, right? The Vega is in a kind of a green zone here. You did pop above. You did come down below yesterday a little bit, then come above. Interesting. Let's look at GILD. I don't know. That's something I would. Gilead. Oh, yeah. Now you're talking. This is nice because also you get some news on TradingView, right? You know, dividends and earnings dates, and you can click these and kind of see what the deal is and when the next, when the past ones were and what happened, and you can see about the financials and click there, and kind of cool stuff, right? When it comes to all the things that you got on TradingView. So let's, what happened? Close that. Okay. Oopsie daisy. The wheel moves it back and forth. What's interesting about this here, and I think that we should look at this really quickly, is that you have a really interesting B going on there. You could see maybe even a P in here. Maybe, no, I think it's a weird B. It's like a B here. It's a weird blank B. So this range right here, there was nothing, and that's when you got that pop to the top. Right now, there's a lot of resistance on the top end. I'm not sure if there's anything in the past that was at that level. Yeah, we can look back here. There was some past resistance. You get above here, though, this thing can keep on going. This move here, though, should probably try to do a back and fill, in my opinion. We'll see how that works, you know, with regard to the future of that. So one of the other stocks I have, when we look at Coinbase, a lot of people are kind of worrying about this whole thing. Coinbase up a little bit, little bit in the pre-market, slightly. 46, nothing to speak. It's down actually a little bit in the pre-market. Just a couple of pennies on that. Oil is down today. We see down 5%. Let's see if we can click that. Yeah, dropping down very significantly. Yeah, all the different oil levels are dropping down. I would assume that XLE is dropping. Yeah, pre-market 90.60, been a good run on that, down about $2 overall. So that's hurting. This must be some news about oil usage over the weekend or something like that going on right now. What else did I want to show you here? Oh, this is a cool one. You like shoes? Hello. Crocs is over 100 on the pre-market. Look at that chart. I mean, yeah, we did see this big downstroke, but look, you're way over the top end. We don't have any new boxes being drawn right now. From a indication standpoint, there really is nothing on the top end except when you get to about right here where we are, 101.83. And that, from there, this entirety is going to be removed from the problem area that we saw. That big bowl that's going on is going to be very interesting to watch. Hey, that ends what we got here right now. Thanks for joining me. I'll see you again, not next week because it's a holiday. We're not doing it next week, but the following, we'll be back with more. Watch your email for that information on the upcoming educational sessions as well. Thanks for joining me. I'll see you again soon. Have a great Thanksgiving.